Understanding Business Valuations Part 2. If you haven't watched our video, check out our video number 1, which was Business Valuations 1. If you're sitting there and you're thinking, oh, what is my business worth? This video is for you. Hi, I'm Michael from MDH Accountants and Business Growth Advisors. If you like this video, click the bell to subscribe to make sure you don't miss out on any of our content and our tips and tricks. Business valuations can feel like alchemy. How do you actually create the valuation that you need to potentially sell your business? So in video 1, which is here, I spoke about why people want valuations. Either they're selling it or potentially getting divorced, and there's a whole host of other reasons. You could have a management buy-in. I also run through some different valuation techniques as well, just at a high level, just to give you a basic understanding so you know that you can look at valuations in lots of different ways. Here are a few more valuations that we could talk about now. One common one is an EBITDA calculation. So an EBITDA calculation, if you take your profit, you add back interest, you add back tax, you add back depreciation, and you add back amortization, that revised figure is known as EBITDA. So that EBITDA figure would then be times by a certain multiple. Now, the average multiple that a lot of valuers use is 3 times. In fairness, it could be a lot of different ways. This also depends on industry, on what businesses sell for. It also depends on how well your business is run, how well systemized it is, and also the size. So if you've got a smaller company, that normally sells for a lower EBITDA multiple. But when you're looking at a bigger business that's got really strong cash flows, really strong income, really strong customers, also a well systemized team and well systemized business that's got great technology, it doesn't need a main owner to run it. So then that way the business is worth a lot more. When you're looking at EBITDA calculations, make sure that this is all current figures, and make sure you're also looking at a blend, because sometimes it's a bit obvious if you see average profit, whoosh profit, you're thinking, oh, what's happened this year? Oh, are they selling it as well at the same time? So make sure that you're looking at the whole picture when you're using this. For me, an EBITDA calculation is one of the most common ways to value a business. A balance sheet valuation. A balance sheet valuation is what it says on the tin. You take all the assets of the companies, you take all of the liabilities of the companies, and you pay off the net. If you've got a current trading business that's still going, you are leaving money on the table. Because you are getting no defined value of goodwill. So a common way that a balance sheet valuation we use is if a company's been liquidated, it's either solvent or it's insolvent, and the assets are divvied up between the shareholders once everyone's paid. When you've got a trading business, you don't really want to be having a balance sheet valuation because that way you are leaving money on the table. Now, one company that is common for a balance sheet valuation is a property company. A property company's assets are its assets, and there's no real goodwill in the company. So if we put an investment company as a property company to one side for a balance sheet valuation, I think that's fair game. But if not, you are leaving money on the table if you are valuing the business based on the balance sheet basis. That's unless you are the acquirer. The best and the only option is seek professional help. People that are in the industry that know what they're doing and have got experience. And also they've got access to the data that gives true reflections of what's actually going up there in the market. Because as you know, there's always Dave in the pub or someone that you may know that knows a little bit of information, and a little bit of information can be really dangerous. Now, if this spurred any questions, please feel free to click on the link below. I'll jump on a discovery call with you. We'll jump on a video call. I'll get to understand you. I'll answer any questions you have, and I promise there'll be no pushy sales pitch. If you are interested in growing your business, albeit by acquisitions or by internally, we've got our own training program called the Business Growth Program. This is where we've got 12 modules. We go through every single area of a business that you would use to grow it, and we walk you through that step by step with actionable ideas and content. Click the link below. We'd love to see you on our course today.